We're going to spin ahead here and talk a little bit about the currency market. It looks like the Fed may be boosting the discount rate yet again. Yesterday, the Fed announced a meeting for Monday, April 5th. We are joined right now on the phone from Algiers by Ashraf Laidi, CFC Chief Market Strategist. Ashraf, we're so glad you are joining us on this holiday. And from Algiers, we know you had a nice night last night, so we appreciate the time even more than usual. The Fed has a meeting on Monday. We know that the Fed moved the discount rate back in February in an effort to normalize, if you like, the banking system, or rather go back to pre-credit crisis levels. What do you expect them to do on Monday?
Well, this is like the worst kept secrets by the Fed, and they do this on purpose. They don't want to give you a surprise like on February 18th when they came out that Thursday after the market dropped, after the market closed in the U.S., and they raised interest rates, and the only markets that they end up upsetting, slightly upsetting, was the Asian markets and the European markets. And then by the time the U.S. markets opened that Friday, the markets were fine. This is very interesting, the way they did it. I'll just talk about the timing a little bit, and I'll talk what it means. It's basically this time the only difference, Deirdre, is they said that on their website that they're going to meet regarding the discount rate. I mean, they're not going to cut it. They're not going to look at it and say, oh, well, the discount rate is as such and such. They're going to raise it. This means they're trying to telegraph to the market that they're going to raise it. So, and guess what? Europe will be closed on Monday. So they have very, very small chances of upsetting the market. As for what does it mean? Well, they have to normalize it because before the crisis, the discount rate was at 100 basis points above the Fed funds rate, and right now it is 50. So they're going to raise it by 25 so the spread will be 75, and it is part of normalizing things. Why? Because this week the Federal Reserve was done buying its MBS, so now this is another step in normalizing the difference between the discount and the Fed funds. The dollar could be bid up.
Ashraf, just quickly, as far as levels go, what are you looking for?
Look, the key level here is whether the euro is going to break above 135.70 or 135.80 after this Friday. If the euro is able to close, let's say, above 135.80 or 135.90, this means that there's a very good chance for the euro is going to push higher and is going to break its downtrend. But we really think that the euro is going to go towards 132. We think the dollar is going to make it towards 94 and 94.50. But later in the year, the dollar is going to drop against the yen. Okay. But euro-dollar is still going down from here, Deirdre.
Ashraf, we thank you so much for the time, especially since he was at a wedding until very, very early hours. That is Ashraf Laidi from CMC World Markets.